Good morning, this is Gurung from Beta. Today I'll be briefly looking at the fundamentals of the currency markets. As you're more than aware, we are a team of technical traders. Majority of the decisions we make are technical based because we believe that obviously that's the best way of trading in these markets. Ultimately, the fundamentals looks at the causes of the market, technicals looks at the effect of the market, and ultimately we want to trade on obviously how it's affected it. But aside from that, traders would also like to consider fundamentals in the picture as well, purely because that's obviously good knowledge to have, and occasionally it may be the basis for a longer term outlook. So on the back of that, I'll be looking at sort of a couple of major currencies we trade. Let me start with the dollar. Now, dollar fundamentally is the strongest currency at the moment. Obviously, short to medium term technically will change, but fundamentally it's the strongest currency out there. The reason being is we've got interest rate in the US just over zero at the moment. However, it will be the first major economy to raise interest rate this year. Probably the only major economy to raise interest rate this year. So the expectation is an interest rate increase of 0.625%. This is obviously on back of stronger fundamentals in the US economy, and also use of the first one to obviously cut interest rates and start QE 5-6 years ago. After the US, UK is probably the second strongest from a fundamentals perspective. UK are expected to raise interest rate mid next year, around sort of 0.25 sort of basis points. After the UK, we've got other neutral currencies like Canada and Australia, where there's no interest rate hike or cut expected, but they are or the central banks are looking at keeping monetary policy at ease, at least until mid next year. And then we've got on the other side of the spectrum countries with sort of loose monetary policy, probably the weakest from a fundamental perspective, and they are Euro and Japanese yen. The reason being is we've got ongoing QE in Japan at the moment, around $80 billion a month, which is expected to continue at least until the end of next year. And then we've got the ECB, who only started sort of QE around a couple of months ago, which again they expected to sort of continue to end of next year as well. They're currently doing 60 billion euros worth of sort of monetary easing per month. And finally, we have the weakest of all at the moment is the Swiss franc. The reason being is, although they're not continuing or they're not doing any QE at the moment, their interest rate at the moment is a negative 0.75, lowest interest rate amongst the major currencies out there. And their philosophy is simple: they don't want people having deposits, they don't want people saving, they want them spending. Obviously, ultimately, by having a negative deposit, you're paying to hold money in banks at the moment, and obviously Swiss National Bank do not want to do that. So therefore, from a fundamentals perspective, that is the weakest currency out there amongst major currency pairs. That's it for today, ladies and gentlemen. I'll see you again soon. Take care.